Hey guys, it's Aman
And Christina
from Our Rich Journey. On today's video, we are talking about investing in IPOs. But in particular, we are going to be talking about investing in Airbnb that recently had its IPO. If you have been keeping up with the stock market, you know that the stock market has been on fire. And IPOs that have been released lately have seen their prices shoot up. And so on today's video, we want to take this opportunity to talk more about IPO investing, because you may have the opportunity to invest in one of the upcoming IPOs in 2021, and we want you guys equipped and educated to do so.
So Robinhood, Instacart, and Nextdoor, these are all companies that have anticipated IPOs in 2021, so we think it's the perfect time to talk about IPOs. Now, before we do that, if you're new to our channel is all about saving money, making money, and investing money on the road to financial independence. Aman and I were on the road to financial independence for 8 years. We reached that goal and we retired early. So if you're interested in that topic, make sure you subscribe to our channel. Now, in this video, we're gonna be talking about IPOs. We're gonna define IPOs. We're gonna talk about the pricing structure and the different phases of pricing for IPOs. And we're also gonna talk about how we are investing specifically with Airbnb. So if you've never heard of an IPO stands for an initial public offering. It's a process that a private company goes through in order to sell shares of its company to the public on a recognized stock exchange for the first time.
So if we're using Airbnb as an example, Airbnb was a private company and recently it went through the IPO process in order to offer shares in the company for sale to the public. Now, when Airbnb undertook this process, it came up with an initial price that it would offer shares in its company for sale. And that initial price was $68 per share. Now, if you were able to buy Airbnb at its IPO price, you were able to get a deal relative to what people ended up paying for Airbnb when it finally started trading on the public market.
So like Aman said, when Airbnb set its initial price, it was at $68, but that price was not available to the general public. When Airbnb went public for the first day where anyone could buy it, it sold at a high of $144.
So many of you may be wondering, how are investors able to buy Airbnb at the IPO price, at that initial price of $68? Because there was only a limited group of people that were able to get that price. If you're going to be investing in IPOs, it's important that you understand what is happening behind the scenes when IPOs are being developed. You see, every IPO goes through a price setting process. They work with their underwriters. And in this case, Airbnb worked with its underwriters to establish a predicted price. And they use this predicted price to offer the initial offering price to certain investors. And it was those certain investors, they were able to buy Airbnb at the $68 per share price.
So with Airbnb, the underwriters were Morgan Stanley and Goldman Sachs. Now they worked with Airbnb to set an initial price. And the higher the price, the more the company can get. But they can't set the price too high because then the demand won't be so great. But if they set it too low, then the company's not making as much money. So they want to get in that sweet spot where they're offering the initial price at the right price so that the price will continue to grow at a stable and gradual pace.
In Airbnb's case, most of those $68 shares went to institutional investors like large brokerages and investment banks.
But the remainder of those $68 shares were also offered to individual investors. So Airbnb set up a program where they offered certain hosts on their Airbnb platform the ability to purchase up to 200 shares at the IPO price of $68 per share.
Now that is a pretty cool program. Imagine being an Airbnb host and you get an email saying you are able to invest in our IPO at this particular price. A lot of people probably took advantage of that. I'm sure not everyone did, because you still have to make a decision of whether or not it's a good investment. Just because you're being offered it at the IPO doesn't necessarily mean that it is. But considering that these people woke up the next day and their shares were worth 144 and they were able to get them at 68, I bet they're feeling pretty good about their decision.
So this leads to phase 2. After that initial price is set and it's made available to a certain limited number of investors, it then trades on the stock exchange and anyone can invest in it. And on that first day that anyone can invest in it, those prices for that share typically are very, very volatile. They go up and they go down. For Airbnb, the prices went up. In many cases, the prices can also go down.
And it is this volatility and hype that makes investing in IPOs very dangerous. You see, Airbnb, everyone knows and loves Airbnb. You get excited about the thought of being able to invest in a platform that you know so well. And you have to keep in mind that these companies are also building up the fact that they are going to allow you to invest in their company. So that when companies that are known and loved by many become public, a lot of people rush to them in this frenzy. And so there have been many other IPOs that have had this initial excitement that you've seen on the first day. You've seen share prices double, triple, quadruple in some cases because of this excitement. But this excitement doesn't warrant the actual price.
So that's something to keep in mind, because even when you're investing in an IPO, whatever stage you're investing, you're still investing in an individual stock, which can be very risky. And it's even riskier if you're not really understanding the fundamentals of its business and you're just going off of the idea of brand name. And we'll give you an example of how this turned out bad. Blue Apron. Blue Apron's initial public offering was $10 per share. Now it's trading at only $7 per share.
And see, this is the risk of investing in IPOs. You see, the frenzy that is involved in investing in IPOs can sometimes get out of hand. We're looking at Airbnb now, and it looks like these people that bought it at $68, maybe they got a great deal if it continues in this direction. But in all likelihood, it won't continue. You won't see it doubling and tripling every couple of days. You'll probably see realistic expectations start to settle the stock down. You see, when you invest in an IPO, because there's not a lot of data out about the financials of this particular company, you are expecting that the company will do well without a financial track record to back up that expectation. This is the definition of speculation.
So at the beginning of this video, Aman actually said that we're going to be investing in Airbnb, but it's not the type of investment that you're probably thinking of. We have a very small percentage of our investments that are in individual stocks. The majority of our money is in a total stock market index fund. Now, with a total stock market index fund, it tracks, as you can imagine, the total stock market. That includes those new companies like Airbnb, companies like DoorDash. That's how we invest in these new companies.
Now, one thing to keep in mind, if you are investing in an index fund, your index fund may not be buying that new stock right away. It takes a little bit of time for certain index funds to pick up that stock. Maybe the new stock has to be on the stock market for a certain period of time, or maybe the index fund only purchases new assets at a certain period of time, maybe on a quarterly basis, or maybe whenever they rebalance. So yes, we may not be purchasing Airbnb as an individual stock, but we will be purchasing it when it becomes a part of the total stock market index fund. But this also brings up a great point and why we love IPOs. And it is because it represents the total stock market's resilience. You see, one of the great things about investing in an index fund is that it is a self-cleansing investment. And we've said this before in the past. But in order for your index fund to completely fail, every company that is a part of that index fund would need to fail. And because we invest in the total stock market, every company on the total stock market would have to fail for our total stock market index fund to fail. But see, what happens with the stock market is that new companies are constantly being added, just like new companies are constantly falling off. So if you invest in the total stock market, you are investing in the growth of the economy. You are expecting companies to fail just like you are expecting companies to be added. but over the long term, you are expecting the growth of the economy. And this has always been the case as long as the stock market has been around.
So we made this video because we think it's really relevant at this time, with Airbnb becoming public and other companies projected to become public in 2021. Now for us, we do not like that risk associated with IPOs and really that risk of putting too much money into individual stocks. But we wanted to present that information to you if you have the option of investing in an IPO, or if you want to further consider investing in potentially an index fund that tracks the total stock market. We wanted to give that information to you. Now, if you like this video, make sure you give us a thumbs up, subscribe to our channel, and
Join the journey.